Okay. Okay, thank you very much. Right, well, good evening, everybody, and welcome to this Audit Committee meeting. I'm going to have to read out a few little bits, which no doubt we've all heard many times before recently, but I will go through some items that need to be mentioned. So would you please ensure that any mobile devices, e.g. Alexas, Google Boxes or mobile phones are switched off? Only members of the committee, the clerk and officers presenting reports will be allowed to speak at the meeting. And if you're not currently speaking or being asked to speak, please mute your microphones. If you do not mute your mic, it will be muted for you. To assist people viewing the meeting, could everyone turn off their cameras and only turn them on when asked to speak? And that is with the exception of the Vice Chairman. So as much as I would enjoy looking at you all, could you please turn your cameras off? Thank you. First of all, I'd like to introduce those members that are here this evening. First of all, I'll go through the committee members. First of all, I'll welcome Diane King, who's the Vice Chairman. I should introduce myself for anybody who doesn't know me. I'm Bill Soane, I'm the Chairman. So again, Vice Chairman is Diane King. And from the committee, Rachel Burgess, Maria G, Angus Ross, Daniel Sargent and Imogen Shepherd-Dubay. And officers and others in attendance tonight are, first of all, Madeline Shopland from Democratic Services, Andrew Moulton, the Assistant Director of Governance, Bob Watson, Head of Finance. Is Bob Watson here? Didn't see, sorry. Stephen Mercer, Internal Audit, Helen Thompson and Justine Thorpe from Ernst & Young. So that's so that everybody who's listening knows who's actually in the meeting. Now, this meeting is being webcast and will be available to view online at a later date. So having done all that, do we have any apologies? Madeline?
No, Chair.
Thank you very much. Item 2, minutes of the last meeting, and this was the meeting held on the 3rd of June. Are there any amendments that need to be made, or are you happy that these are a true record of that meeting and can be signed at an appropriate time as such? Everybody happy with those? If not, can you please state the case?
I'm not going to vote. I will abstain, but only because I wasn't at the last meeting. Thank you.
Okay, thank you very much for that.
And Chairman, I'm in the same situation because unfortunately I was unable to get into the last meeting.
Okay, thank you very much for that. Otherwise, we'll assume that everybody else is happy with those minutes. Do we have any declarations of interest that need to be mentioned tonight? No. Okay, so now we go on to public question time. Do we have any public questions?
No questions.
Thank you very much. And members' questions? Are there any members' questions?
No questions.
No questions. Thank you very much. So we now come on to item 6, and that's the report from Ernst & Young, a progress report. And I could ask, I don't know who's speaking first from Ernst & Young, whether it's Justin or Helen. Who would like to present the report?
Thank you, Chair. Sorry, I just almost lost my voice at the same point. So it'll be me, Helen, who's presenting. Justine's here in case you ask me any tricky questions.
Okay, thank you very much.
So in terms of a progress report, I think it's probably fair to say that the reason why you don't have a written report today is that there is very little for us to update the committee on. But we thought it was important to let the committee know where we are at. So we presented our audit planning report to the last meeting, and within that we highlighted the risks that we have identified to the audit of this year's financial statements, and that included an assessment, our initial assessment of where we thought things would be either trickier or different in relation to COVID-19 and the impact that has on the audit. I think the critical point to make is that there was a change to the deadlines, so the requirement for the production of the draft financial statements was moved from the 31st of May to the 31st of August, and the indicative deadline, for want of a better word, for completing the audit of the accounts was moved from the 31st of July to the 30th of November. We have been having regular meetings with your finance team, with both Bob and Mark Thompson and others, in terms of progressing, keeping in touch with progress of the production of the financial statements. And Bob may want to add something when I've finished speaking. But we have agreed that it makes sense to use the additional time that has been granted to prepare the financial statements and ensure that they are prepared to a good quality with supporting working papers. And the finance team has been under significant pressure, as I'm sure members will appreciate, with the impact of COVID on other operations, particularly client-facing operations of the council. So we are expecting a draft of the financial statements at the end of this week, and we will start our audit from next week. And we're now carrying out a split visit, with the first part of the visit over the next 2 to 3 weeks being focused on the review of the statements and selecting samples. We'll then, because of our own sort of need to manage resources across a number of audits, we will come back towards the back end of September and then complete the audit then. So it gives officers time to be able to prepare responses to our samples and pull that together without us also breathing down their necks on other aspects of the audit. So the intention is to bring the statement of accounts for approval and our audit results report to a committee in November. That's no reflection on the quality of what is being done. It is more a reflection of just the demands being placed on the finance team. As things stand, we haven't identified any further risks that weren't reported in our audit planning report, and we will be touching base with the auditors of the pension funds to get corroboration from them that they are sticking to the timetable that they had initially indicated for producing their assurance letter to us, which, as most members, I think all members are aware, caused the delays to last year's audit. Justine, is there anything I've forgotten in that, or? I think she might be on mute.
Sorry, yeah. Just to say that the government has recognised the increasing pressure on councils because of COVID, and therefore the accounts production deadline for councils is the end of August, and then ideally these should be audited by the end of November. So you're very much in line with the national norm.
I think that's all we wanted to say, really, Chair, in terms of an update. Obviously, Bob may wish to comment from a finance team perspective, but happy also to take any questions that members may have.
Thank you very much. Can I just clarify one thing? You said that you will be preparing a report at the end of September. Yes.
So we will be completing the second part of our visit at the end of September, from the end of September, but because we're obviously auditing a number of clients, all of whom have had similar challenges in terms of producing accounts. It's been a case of trying to ensure that we bring back the right team, and preferably a team that is consistent with those carrying out the work in over the next few weeks. So that means that we will be back in September for a period of four or so weeks to complete the audit, and we will prepare the audit results report in time for the November committee.
Okay, thank you very much. Thank you. Right, I'm going to go through, first of all, in alphabetical order and ask our members of the committee if they have any questions. So I will start with Rachel Burgess. Do you wish to have any?
Just one question, and now we're a bit sort of further on in the process. Can you tell us a bit more about how you're going to form your going concern opinion this year, and what evidence you'd expect to see, and how you will audit that evidence, and how that might have differed from the previous year before COVID?
So absolutely, it's more of an area of focus for this year, and our starting point for carrying out an assessment of going concern will be the management's assessment of going concern. And we will be talking to Graham, Bob and the finance team about what we are expecting, the level of detail that we are expecting. Ultimately, all government body, all all of the public sector, or almost all of the public sector, would be considered to be a going concern. So there's a presumption of going concern. So I very much doubt that we will be in the territory of material uncertainty. There is a possibility that for audits that have components such as Wokingham, there may potentially be a material uncertainty over the financial viability of a sub. But at this stage, I can possibly comment on that. But for the council itself, it is highly unlikely that it would be anything other than a going concern. So what we will be looking at is the level of the disclosures, both in relation to going concern and to post-balance sheet events, in fact, because obviously there's the volatility has continued through. And that will be something that we are probably going to be looking at in our September visit. So that's not something that's yet been prepared. The way in which the firm is working is that all consultations for certain categories of council, which will include Wokingham as a unitary council, will have to go through a consultation process. So there'll be work that's carried out by Justine and myself as a team, but it will also be reviewed for consistency with others. And that's, again, very much looking at the level of disclosures. The good news really is that, well, the good news for us, bad news for some, is that with the delays in some of the 2018-19 audits, we've got a good idea of what good disclosures might look like now. So we can point your finance team in the direction of published accounts that would have a level of disclosure that we know will meet our requirements. I hope that helps.
Yeah, thank you. Thanks.
Maria G, do you have a question?
Yes, I have just one question. In relation to post-balance sheet events, thinking about the volatility in the property market at the moment and the likelihood of rentals being received or not, would you expect to look at the values of commercial properties? I know they don't have to be revalued, strictly speaking, until next March, but I would expect in such a volatile and uncertain world that you might want to bring that forward, albeit there are problems, I know, with valuing commercial properties at the moment. So I'm just looking for your views on that.
In relation to your investment properties, they are obviously required to be revalued each year at fair value. And so we would expect to, and we are going to be involving our EY real estate colleagues who are the valuation specialists in the audit of that particular element. And I am sure that they will also take into account, to the extent that it is possible, what that might look like in terms of post-balance sheet events. But that is going to be harder to quantify.
Because I'd been told before, I'd asked about the properties, and I had been informed that the properties that had been held for less than a year didn't need to be valued until March 2021, but you would be looking at all of them. We will, because the requirement is that the fair value is at the 31st of March 2020, we will look at whether or not an appropriate exercise has been undertaken, and under the circumstances of this year, we would expect all to have been reviewed, unless they were purchased practically on the balance sheet date. Thank you very much.
Thank you. Diane King, do you have any questions? You're muted, sorry. Hello, Diane.
No, I think I'm okay at the moment.
You're okay? Yeah. Okay. Councillor Angus Ross.
No questions, thank you, Chairman.
Thank you very much. Daniel Sargent.
None from me either, thank you.
No. And Imogen Shepherd-Dubey.
My questions are a lot have been about COVID, but some of those have been answered. I mean, the level of borrowing that this council has, I'm just wondering if that's normal or expected. It just seems to be quite high at the moment. That's all.
I suspect that's possibly more a question that would be best answered by officers. Obviously, we will be confirming the borrowing figures.
Yes.
Within our value for money work, we will take into account, in terms of reaching a conclusion over the financial resilience of the council, we'll also be looking at the level of, a bit of a match between the levels of borrowing, the level of reserves. So if we are concerned about anything, we could bring it out through the value for money work.
I understand our level of reserves have got quite low at the moment. So, I'm sure you'll get there. That's all. Thank you.
Yeah, I think all councils currently face a significant challenge, and hence really the work, the enhanced work around going concern, which does also link through to the value for money work.
Thank you very much. If there's no further questions, can I thank you very much for the report and your attendance? And can I ask the members if they're happy to proceed to a vote on this item? So could I ask all in favour to say aye, or if you're not in favour, then please indicate.
Could you clarify?
Sorry?
What's the
you broke up. The recommendation update, to note the update. So it's just to note the update. It's not actually a recommendation, it's to agree the update.
Okay.
All right. So if anybody is against agreeing that update, could they please indicate? Okay, I can assume that has been agreed and the update's been accepted. Thank you very much. Okay, we go on to item 7, the Treasury Management Outturn for 2019-20, and could I ask Bob Watson to present, please?
Yes, good evening, all. You can all hear me, can you, and see me?
Yes, can.
Yep. I apologise for that, you haven't been able to see me then. It's the annual Treasury Management Outturn report is one of 3 reports that we bring through Audit Committee onto Executive and then onto Council. The other 2 being the annual Treasury Management Strategy, which goes to Council in February to set the policies for the following year, and the mid-year report is to give you an update during the year. So this is the Outturn report as at the 31st of March 2020. And I suppose the key indicators that from the report are to note that none of our prudential indicators in terms of the operational boundaries of debt and the authorised limits were breached during the year. And the Treasury outturn position was a net £380,000 favourable against the projected budgets, which were about 4 million each way. Is it easier if I take questions rather than go through the report line by line?
Sorry, I'm muted. Yeah, if you're happy to do that, we'll ask the members to ask questions, and I will ask the members in a reverse order this time, so everybody gets a fair crack of the whip. So first of all, can I go to Imogen? Do you have any questions, Imogen Shepherd-Dubay?
No, Chair, I don't have any questions, thank you.
Thank you very much. Daniel Sargent?
Yeah, just a couple of points. So firstly, I read through the report, so it's page 19 of the overall pack, page 3 of the report itself. The table at the bottom there still refers to an estimated outturn for 1920. I wondered if that was still an estimate or whether that's a typo. I guess that's a quick question to answer, potentially.
Yes, the quick answer to that one is it wasn't a typo when the report was first drafted. It is now. We will get that corrected.
No, makes sense. And then it's not really another question, but just a general point. So, obviously welcome the report, and I think it shows another good year of Treasury management. And the thing that caught my eye, and probably some other members, is the 1.6 million that's been brought in through the property investment portfolio. And it's interesting. I think it's a much criticised policy by some members. But, the money that's bringing in is obviously funding services, and it's interesting to contemplate what services might have to have been cut if that wasn't happening. So thank you for the officers involved with that. That's all from me.
Thank you.
Thank you very much. Councillor Ross, Angus Ross.
Thank you, Chairman. I don't think I have a question, just an observation on page 15, where we've got the chart showing the percentage average rate of return. and interesting that the highest rate of return is on our investment properties. And I'm sure there'll be comment later on between the competition between the fund managers and the local authority and money markets. But I just found that an interesting observation.
Thank you very much. Thank you very much. Councillor Diane King, do you have a question or a comment?
I always get to unmute myself. No, thank you.
Okay. Councillor Maria G, please.
I have quite a few questions. So how would you like to do this, Chair? Shall I just
do a couple to start with, and then we'll come back to you.
Yeah. So I'll go to the item raised by Daniel, which is the 1.6 million on property investments. So the investment properties. So I asked Bob a question about this before the meeting, and he was kind enough to reply. And it appears this isn't the rental income. This is an interest cross charge, which appears to be under the control of finance. So the reply that Bob gave me was that this is a charge from finance to properties. So who chooses the 5.11% annual average rate of return? Because initially I thought it was rentals.
Sorry, no. I've misunderstood your question then when I responded. The 5.11% is the return on the two investment properties that the council has run through its treasury portfolio. That being the two properties that are actually outside of the borough, because we're not allowed to borrow money to fund those properties. So we use our treasury investment pot to buy those properties. Sorry, the 5.11 is the gross figure coming in from the rental incomes, but we then charge a notional rate of interest against those properties to offset the impact on the taxpayer, which basically means the taxpayer is not paying for the financing charge or the debt repayment on those properties, but they're actually paying for themselves through their position. So the actual deduction we make in terms of the notional rate is 2.75% for the debt financing charges, and we also then charge a minimum revenue provision of 0.667%, which represents a 10% movement in the property value downwards if it happens over the 15-year life of an investment property, which again is using an industry guidance as to how long a property stays. And council's advice was taken, not council with an S, not with a C, was taken on this by a neighbouring authority, which we piggybacked onto as to whether that's a valid way of accounting for it, and they agreed that it was. So the asset actually, the repayment is backed by the value of the asset we have, as it is classed for investment purposes, and therefore we're just making a minimum revenue provision for an anticipated movement in a prudent way, that if the value does drop, historically these values don't drop by much more than 10% over the life of the asset, if they do drop at all.
Okay, so the 5.11% in the table, if we take off the so 5.11 minus, if we take off the 2.75, was it?
Yes.
That means that the net return is 2.36, and then if we take off the 0.665, so the actual amount released to the revenue account would be 1.695%, and you know, whether you compare that 1.695% with the 1.9% or 2.36% in 1.9 compared to the 1.9% that you've got in the narrative under the table, it reveals, I think, a rather different picture of the performance than this table does. I'm not disputing the 5.11%. I'm just disputing the interpretation and the comparison to the 1.9% of monetary investments, I think.
Yes, although, as I said, the 2.75 is a notional rate, and that's probably set high to make sure we are covering all the costs. Our current cost of borrowing for these sort of length of durations would normally be around about 2%. So the extra 0.75 would be going back into the council's general fund balance as well.
Yes, but it's still it's a cost of using the capital against that particular investment as opposed to having it elsewhere. If I can just make a quick observation, as you probably know from the previous from the council budget meeting, I'm not very happy about table 2 because I think the peak debt is misleading. Although it does say, so this may not be a question for you, Bob. It may be a question for elsewhere. Although you've taken the time to answer, so that peak debt is not the peak debt that we can anticipate in 2023 because there will be more debt taken on for investments and our capital programme generally. So I just wanted to make that observation. I think it's a misleading table because I think most people looking at it would think that was a peak debt and it was going down to zero. I understand your answer, which is that it's peak debt of the debt we're planning to take out in the lifetime of the medium-term financial plan. But overall, I would be happier with a sort of health warning, I think, on that table. So that's just an observation. Chairman, I'll move on, but I do have a couple of other questions for later, but I'll let anybody else who wants to come in.
I'll come back to you shortly. Rachel Burgess.
Thank you. I understand that this report is basically a backward-looking report. But one of the key graphs that is brought out is this table 2, Councillor Chi just mentioned, which is of course forward-looking. So table 2 is still based on the MTFP, as I understand it, and obviously the MTFP was agreed pre-COVID. But there's no reference to the impact of COVID in the report, apart from at the very, very end. So that's quite surprising because it is a forward-looking analysis, that part, and it's surprising there's no reference to that. So with the general principle of this part of the Treasury strategy being that you borrow money to fund capital investment, which then generates income, I'm interested in looking at table 2 and understanding a bit more about the extent to which these forecasts would have now changed. So, for example, what is the impact of any elements of the capital programme that are being delayed or that are no longer affordable? What is the extent of the impact likely to be on those asset values? And probably most crucially, what's the likely impact on the income that we will get from that capital investment, and how much is that likely to reduce due to COVID and the impact on retail and other sectors? There's just a general point that these figures are presumably sort of about 6 months old now, and I'm interested in what an updated analysis of that graph would look like.
Okay, it's a valid question. As I say, it's based on the information that we have at the end of the year when we started putting the tables together. Obviously, since then, and those of you that have read the capital monitoring report that's going in to executive tomorrow will notice that we have potentially deferred £105 million of capital expenditure by 12 months to sort of due to the impact of the COVID-19 on our cash flows. So not all of that £105 million will be funded by debt, and we haven't done the analysis around that yet, because some of it will be funded by contributions from developers, which is the main reason why we're trying to defer some of the expenditure, because obviously the contribution doesn't come in or is delayed coming in, and we started the expenditure. We're forward funding that, which is a council policy on a lot of our infrastructure, that we will forward fund to allow developers to then get the developments to happen. But where we know there's going to be a delay in a SIL or Section 106 receipt, we'll defer that part of the programme. And there's about 20 million of that 105 that's being deferred due to that very reason. So what you would see is probably the peak debt figure not increasing, but probably shifting to the right slightly in the table, which would then probably mean that the everything else in terms of repayment will shift slightly to the right as well. But it's only by a 12 months deferment at this stage. Obviously, as yourself and Councillor G pointed out, it doesn't take account of anything else that is going to happen in the future, purely because at this stage we can only work on what the council has indicated to us is a capital programme for the next 3 years, and that's what we're doing. So as you see, the debt will increase from this year up to 2023-24, and then that debt, and that is only the debt we're looking at here, would then start to be paid off through income receipts coming in, capital receipts coming in for some of the regeneration assets, and that's how that one amortises. Obviously, I wouldn't be so naive to suggest that is our peak debt at any one point, because obviously anything else that's agreed in the capital programme would increase that debt further down the line. But I can't predict what's going to be put forward or agreed. Certainly, I wouldn't have predicted this time last year we'd have a COVID-19 pandemic that's going to impact on our capital programme. So again, we have to react to what we're doing. All we're demonstrating, I think, in this graph, and that's the key thing, is the debt that we've taken out is affordable in terms of our repayment profile. And the red line, I think, which is even more key, demonstrates that the asset value, which we flatline for prudence, and is likely to go up over a period of time, shows that our value of our assets we hold exceeds our level of debt.
Okay, thank you. I did have one other question, but perhaps we'll go back to Maria if she's got more.
Yes, so I think one of the problems that I have with this report is there's a lot of numbers in it which are calculated numbers from other numbers, and you've been kind enough to provide those to me, Bob, such as the 252,000 saving. So I think just generally, I would like to see, I like to see in tables, if numbers come directly from books, then that's fine, you can give a breakdown, but where they're calculated, I would like to see it. But the one I'm going to focus on particularly is the saving of 380,000, which you replied to me was a saving on interest received and paid on long-term balances, but it also appeared to be short-term balances. I think you said working balances, and there's nothing about working balances in here. And in fact, that would be sort of working capital. And so I don't understand where the 380,000 comes from, and I would like to understand that a bit more.
Yes, I appreciate your comment about the number of numbers. What we have tried to do, and may have failed at this stage, is to simplify the report. I see a lot of Treasury reports that come through to me ready to go in that are jam-packed with numbers, graphs, calculations, and I just didn't want to try and bamboozle too many people. The £380,000 is basically the net position around what we had in the budget to pay for our debt financing and what we had in the budget as our expected income receipts from interest on balances that have been invested. So when I say working balances, that basically is our balances we have ready for investment pending paying out throughout the year. So we maintain a level of balances that we have to hold for liquidity purposes.
Those appear, I don't think any of those appear in this report, though, do they? So I just can't work it out at all. And I think that overall, I think the financial implications are a worry to me, because I just can't work it out. And I don't know what working balances have got to do with Treasury management, I guess.
Because it's the probably key tenet around our Treasury investment strategy. We have any one point in time balances of up over £100 million coming in, where we collect a precept in from the public, we get money from the government, we get business rates money from the government and retained, we collect them in, but then we pay them out throughout the year to the police, to the fire brigade. We pay to the central government a huge amount of our business rates. If you consider the council's business rate collection is around £76 million a year, and we get to retain probably about 14 million of that. So there's a balance in there that we collect and then pay out later. What we do have is that working balance to do something with. I can't sit with that level of money in a current account. I need to put it into various institutions to invest it. So that's what I mean by the working balances that we play with. And play is a term that I don't actually say I'm not playing with it. I'm working, managing it as we do. So the idea is being, whilst we hold a positive balance, we will try and invest it for as long a duration as we can, pending it going back out of the council. So try and make a return. And that's where we get our interest on our income balances that come through. And that's what contributes to the £380,000 net position of a favourable variance against the budget. So our budget for bringing in income and investment income, I think we exceeded by 850,000 last year, but our debt financing costs, purely because our budgets at one point were just haven't been reviewed and set properly, in my view. and that's my fault because I've not reviewed them and set them, but the net position has always been favourable in terms of looking at our debt financing costs versus our interest available. And that's part of the rebalancing work we're doing this year to try and get those balances set out and get the budgets in the right place and organised. Thank you.
That's the end of my questions. Thanks.
Thank you very much. Just before I go back to Rachel, Andrew, is your hand up? I've got a...
No, Chair, I think it's Imogen's hand.
Is it?
Yeah, I'd like to ask my questions.
Okay, we go to Imogen first, and then I'll come back to Rachel after Imogen. Imogen, we'd like to go ahead.
Yeah, sorry about that. I couldn't find my questions, which is why I was like, now I found them. Basically, my concern is about the £52 million worth of external borrowing. Why is that so much more than it has been in previous years?
Simple answer is the council has approved a larger, more expansive capital programme for regeneration and investment within the borough.
Okay, I'm just sort of concerned about that. It was such a large amount of money. Obviously, we've hit COVID. I mean, I sort of echo Rachel's comments about the chart and the COVID and how is this going to go in the post-COVID era and going forward. Obviously, we don't know because it only goes up to March. And why we it's kind of it's the with the property investment, I think Maria sort of touched on it, is that I'm not convinced that it's a true figure because like 1.6 million, considering the amount of money that we've got invested by the property investment group, the return looks quite small, and it may be just I'm reading it wrong, but I'm not too sure. And it looks with the 1.6 million, what if we lose a tenant? You know, I mean, a tenant, obviously it's happened with the town council. We've lost one of our tenants in our town hall, and it's had a significant hit on this sort of scale. If we lose a tenant, it's going to affect all of the property and the return on the property investments, because if you have to coast for a while until a new tenant is found. Am I making any sense?
Yeah, no, that's a perfectly sensible question. As I pointed out, this is only the two investment properties that we have outside of the borough of Wokingham. Right. So there's a larger portfolio that's been managed by the property investment group, but that includes properties that have been bought for economic development and regeneration within the area, and for not purely for investment.
So this is the tyre warehouse in Peterborough and Wicks in Basingstoke, yes?
They're the two properties, yes, as I say, because they are funded through our Treasury investment portfolio and not through potential borrowing, which again is the government cutting down on not allowed.
But if we lost either of those tenants, say Wicks went bust, for instance, and then, you know, the rent we get from, actually the Wicks is the smaller one, I think the tyre warehouse is the bigger one, but say it went bust, it went into liquidation, we would be coasting for several months without a tenant, I guess, and it could seriously impact return from the property investment.
It certainly would, and that's a risk with any investment portfolio. And I recognise that only 12 years ago the Icelandic banks went pop, and that became a problem with the investments on the side of things there. Couldn't have been foreseen particularly, or not because money was tied in with the banks. So I suppose the issue is with these properties, the value is around the tenants. And I know, because I'm part of the property investment group, the security and tenure of the tenants is something we consider as what drives the value of these properties. So it's not based on any land value or property building value. It's based on the tenure of the tenants. And again, we have to just make that decision based on the quality of tenants in there, and also run a balanced portfolio that allows us to absorb any downturns we may come across.
Why is the information about obviously the tenants get reevaluated, why is that information not brought to audit?
It's produced through a different democratic process. The process for selecting properties for property investment group is run through them. How
is it audited? How is it evaluated and audited? Who decides whether it's a good investment or not for this council?
Initially, it would be property investment group, and the ultimate decision falls onto the council's section 151 officer.
Yeah, it doesn't feel very safe to me. But okay, I'll go away now. Thanks.
Again, that I suppose is not really a question that I can answer at this stage. It would have to be either put through the Audit Committee yourselves or through an overview and scrutiny or call-in decision. But the process was approved by Council for how Property Investment Group worked when it set up in October 2017.
Yeah, it doesn't have the safety checks on it, though, that I feel that it should have. But I shall leave it alone now. Thanks.
Thank you very much. Come back to you, Rachel.
Thank you. I just had a few very brief comments on the investments, coming back to the investment side. So page 15. So looking at the returns that have already been discussed to a certain extent. So I understand why you would use money markets, due to the flexibility that would give you despite the low interest. Why is there so little invested in with fund managers when they have been generating a better return than, say, the other local authorities? And would you look to increase that at all? And if you just related to that, how do you ensure that those funds are actually invested ethically? And could any of those funds actually be tied up in, I don't know, tobacco or oil and gas or whatever, as opposed to, renewable energy or more sort of ethical investments? And then just very finally, one other very brief point, the investment balance on page 19 actually shows investments of 158 million. I wasn't sure what the difference between that figure was and the 135 million shown on page 15.
Okay, let me just do the first question or two questions, which I think you partly answered your first question with your second question.
Right.
The fund managers are very low because they're historic. Basically, we have money in the fund managers we put in a long time ago, and because of some of not the concerns about the ethical status, but because we don't know the status, we tended to not use them in the recent couple of years. So that's why the balances in there
Could I just come back on that? I mean, could you not look for fund managers that did offer an ethical portfolio?
We can, yes. It depends again on how long we want to invest the money for, because obviously generally within a fund manager you're looking for a longer term investment. Most of our investments with local authorities, which is the bulk of the money going through, is either 12 months or 24-month loans on a fixed term deposit system, which basically we have that some security. Again, it's also part of security. Local authorities cannot go bust owing money to another local authority. The government will underwrite it. Yeah. So it's part of that security as well, which is our key primary treasury management strategy line. We look at security first, then liquidity for when we need the money back, and finally we look at yield. So whereas yield is nice to have, we do look to a balanced portfolio, but we're not chasing dollars all the time.
Yeah, understood. If
I can just jump down to page 19, you say it was. There might be a simple answer. I'm not sure if I can give it at this stage, but there will probably be a valid reason in there somewhere. Off the top of my head, I can't give you the answer, but I'm sure I can find one. I'll come back to you. Is that okay?
Okay, yeah, that's fine. Thank you.
Send a report to committee.
Thank you.
Thank you very much. If there are no further questions, we'll go to a vote, and we are voting on 5 recommendations. And if you've had a look at the agenda, you'll see the recommendations, but if you would wish, we can either take them on block if you're happy, or I go through them individually, so you're voting on each recommendation. So first of all, if I was to suggest a vote on block, would anybody be opposed to that?
I would like to abstain.
You're going to abstain?
Yep.
Sorry, yeah. Is anybody else opposed to it? To any of the recommendations? And if not, I will ask for you to vote for all 5 recommendations.
Sorry, I'm going to be voting against.
So am I.
Oh, you are, right. Okay. Are you voting against all of them or just an individual?
All of them.
All of them, Maria?
Yeah.
Maria. Okay, so we have 2 votes against. Therefore, I can only assume that we have, let me do my maths, 3, 4, and myself 4 or 5. So that would be, sorry, Angus, did you wish to speak?
No, I was going to support the recommendation.
Okay. So
recommendation too.
Fine. Okay. Daniel is, yeah. And Otherwise, it's Rachel and Maria against. So
abstaining. Councillor Burgess is abstaining. Not
Councillor
against.
Burgess.
Thank you.
Right, okay. So, sorry, we have Councillor Burgess abstaining, Maria G abstaining.
No, she's against.
Chair, can I clarify? I think, and please jump in, members. I believe it's Councillor Burgess abstaining, Councillor G and Councillor Shepherd-Debay are against, and
Right.
yourself, Councillor Sargent, Councillor Ross and Councillor King are for.
Yes. So we are split 3 and 3. Yes.
No, we should.
No, 4. So
4. Sorry,
4.
yeah, I'm missing Diane. Sorry, 4. So
No,
therefore,
it's
the recommendation is carried and voted on for all 5. Yes, thank you very much. Can I thank Bob for his report? Thank you very much for your time and your report.
Thank you all. Thank you very much.
Thank you. Right, we come on to item 8 on the agenda, which is the Corporate Risk Management Report. And could I ask Andrew Moulton to present, please?
Thank you, Chairman. So if I can turn the committee's attention, it's page 27 to 78. And let me just start with the recommendations in this report. So firstly, it's what you would consider every time you look at the corporate risk register. So to consider and note the risks around the corporate that are detailed in the corporate risk register. Secondly, though, tonight we've got the update to the enterprise risk management policy and guidance. And then thirdly, and it seems particularly apt, Chairman, at the start of a new municipal year to ask the committee to consider any particular training needs that they may have around risk management. And if I could turn the committee's attention to the top of page 28, just by means of background there, what I've done is set out the remit of the Audit Committee as per the Council's constitution with regard to risk management. And you'll see that there's 4 things that you need to pay attention to as members of the committee. So firstly, thinking about the annual governance statement, which is the penultimate item on your agenda tonight, and checking that it properly reflects the risk environment. Secondly, as I say, this is what you do at every audit committee meeting, but consider the corporate risk register and ensure that the strategic risks of the council are being actively managed. Thirdly, and again, you've got this evening to review and any revisions to the risk management policy and strategy. And then fourthly, as I've already mentioned, to think about any particular skills training, knowledge training that may be helpful to members with regard to discharging your responsibilities. As I say, I think it's sort of timely just to think about the remit of the committee before we delve into the detail of the corporate risk register itself. So at the last meeting, the Chief Executive and Deputy Chief Executive presented the corporate risk register to you, noting that it had been updated, albeit I think it was badged as an initial sort of assessment in terms of the impact of COVID. So since the June meeting, there's been a lot of work in directorate leadership teams with directors, with the Chief Executive, to provide a more comprehensive update to the risk register, which you've got in your pack this evening. And the changes I would sort of characterise in 2 ways. So the first is presentational changes. So we've put at the front of the register the 6x4 matrix, giving you a sort of snapshot of all the risks of the council and how they relate to each other in terms of impact and likelihood. We've attempted to describe each risk hopefully more straightforwardly, more precisely, in terms of its cause and its potential impact. We've gone through a review of impacts and likelihoods, and there have been some changes since last month. We've also been looking carefully at the mitigating actions and putting timelines against those mitigating actions wherever possible and a clear owner of those actions. And then finally, in terms of presentation, what we've tried to do is link every corporate risk back to one or more of the council's 7 priorities, which are in the inside page of your agenda tonight. So that's the presentational changes. In terms of the actual composition of the register itself, we've identified 4 new risks that have been added to the register. They're telephony, IT infrastructure, the public sector equality duty, and pandemic response. You can see in the main body of the report in the middle of page 29, there's been some significant updates in terms of some of the existing risks as well, which I'm very happy to take any questions on. And we've not removed any risks at this stage. But just going back to sort of the remit of the committee in terms of looking at the process of risk management in the council, I think in a mature organisation that's managing risk well, you would see new risks coming onto the register and old ones going off as we mitigated the risk and lowered the likelihood or lowered the impact of each of those risks. And that, I think, is something for the committee to look out for over the next few months. Just in terms of the update to the risk management policy and guidance, I think Helen's still on the call, but I think it was identified by the external auditors last time that it had been some time since the committee had reviewed the policy. Actually, it was 2018, although that review hadn't been put on the website. But it is good practice to look at the policy and strategy regularly. So it's been updated. What you've got in the pack tonight, it reflects the impact of COVID. It reflects the fact that the council's got a new community strategy and corporate delivery plan that was publicised earlier this year. And it does attempt to emphasise the links to 2 items that you've got later on the agenda this evening, the local code of corporate governance and the annual governance statement itself. And I guess in terms of the items that you've got through the rest of the agenda, one of the things that officers have been trying to do over the last month is to create stronger linkages between these different aspects of governance, whether it's risk management, whether it's the annual governance statement, whether it's the work of internal audit, and attempting to better show how they connect together to give you the assurance that you seek as an audit committee. I'll pause there, Chairman, and happy to take questions that members have got.
Okay, thank you very much for that, Andrew. Can I go to Rachel Burgess first, please?
Thank you. Thanks for that, Andrew, and thanks for all the work that goes into the report. I know how time-consuming these sort of documents can be, so thank you for all the changes. I do understand your points about the role of the committee and our tendency to do sort of deep dives, but I do also think that sometimes we use that detail to gain the assurance that we need as a committee that the process is working. So, you know, by sort of questioning on the details, sometimes that's how we get the assurance we need, I think. I've got a couple of questions, Chair, so quite a few questions rather. So if I just do it, perhaps a couple, and then perhaps you can come back later if there's time.
Yeah, that's fine.
Firstly, I'm interested to know what the thinking is behind the pandemic's risk only being a medium risk. And there's not any reference in there to what I would sort of imagine as the biggest risk within that area, and that being a sort of second wave of the virus, perhaps in close proximity to the first, so perhaps over winter. The impact of that on our community, on the council's finances, and all the rest of it would be significant. So I'm really interested to know why that is only rated medium.
Okay. So the thinking behind that at this stage is that the council's got a local outbreak plan in place. Its emergency sort of response was obviously well tested through the first phase, and I think the feeling amongst officers is that it's absolutely right that it should feature on the corporate risk register, but we believe that the mitigations that we've got in place put it into that medium category at present, but that's not intended to say that this isn't an important risk that obviously we need to manage really carefully through the next few months in particular. But I guess we're also sort of thinking beyond COVID-19, but thinking about what might happen in the future. So it's a combination of those things that has led the the officers to sort of conclude that position at the moment. But I think, yeah, that's a really good challenge, Rachel. And having said what I said at the beginning, that wasn't the intention to steer members away from looking at individual risk, because I agree that's an important part of getting under the skin of how well the council's managing its risks.
Okay. And can I also pick up on the climate emergency risk? So this is page 46. So I'm pleased to see that carbon reduction targets are now referenced. I think the wording on this one is probably a victim of the timing, because obviously the council now have considered the detailed climate emergency plan. Now, there were some significant problems with that plan, in my view. So there was double counting. There was, elements of it that didn't add up. There was some, in my view, dubious assumptions in there. And even if you put all that aside, the plan, it was, roughly 25% short of where it needed to be. So that plan needs a lot of work. So I personally, I'm not sure how we can't justify that risk being actually very high based on the action plan that we saw at council.
Okay, again, I think that's a good challenge. I mean, the risk register was completed and published before we had the council meeting last week, but I think as we go through these next few weeks and reassess that risk, we'll need to think about the feedback from the council meeting and the other activities that are taking place before the risk register comes back to you at the end of September.
Okay, thank you. I did have a few other points, but I'll let someone else have a
Okay, thank you very much. We move on to Maria.
Yes, I'd just like to pick up on Rachel's question about pandemics. And I understand that we've got a mitigation plan which would reduce the impact, but I just wondered whether it was in the wrong place on the matrix, because very high in terms of likelihood should be an event that's got a 50% chance of occurring in the next 6 months or has happened in the last year. So I would have thought mitigation is something in terms of the pandemics that would affect the impact, whereas the likelihood would be unchanged because it's not within our control. So, Andrew, I just wondered if you would like to comment on that.
Yeah, again, I would say there's a degree of subjectivity in terms of the assessment of impact and likelihood. I think, again, it's a fair challenge in terms of have we got that likelihood right. But I just repeat what I said to Councillor Burgess, and it's not intended to underestimate the significance of that particular risk. And I think we as officers, certainly we need to do more work around the mitigations that we're putting in place. Obviously, there's a lot of work taking place through the Scrutiny Committee around understanding and learning from the first phase, and from an officer perspective, we're committed to sort of building in that learning with regard to any second phase that might arise. But yeah, I'd agree, Maria, we need to constantly keep that under review, and that was just a snapshot in time when that was completed.
Okay, two questions. So one is about the matrix, and then the other one I can leave until after other people have come in. Very small question. So in terms of the matrix and looking at the risk assessments you've got underneath, you've got impact of COVID as one of the columns, which I think is excellent. But that does rather imply that some of these risks could have a sort of multiplicative effect. So adult social care market combined with a pandemic, combined with perhaps a no-deal Brexit, which results in fewer social care workers coming in, could be regarded perhaps as multiplicative. And I'm just wondering what you that interact to make it's not so much synergy, but they all come together and it makes it much bigger than the individual ones.
No, I absolutely understand that point. I think it's probably fair to say at the moment that each risk tends to get considered more in isolation of each other. And I think, again, in terms of the maturity of the council's risk management approach, making those linkages would strengthen the overall risk register. So that's certainly a point, Councillor G, that I'll take away.
Thank you. I'll come back to the other question later.
Okay, thank you. Diane King.
Thank you, Chairman. I was thinking, in view of the sort of questions that are being asked, it's actually mentioned on page 30 of the report that whether it would be possible to do some training for members. And I think these are very complicated times, and some of us are very financially aware, some more than others. And I thought maybe it might be a good time to take up that opportunity to train some. I mean, it could just be this board, or it could be wider than that. So I'd just like to put that on the table for members to consider whether maybe it's our responsibility to make sure that members understand what they're signing up to and what they're spending our residents' money on.
I mean, just on that point, we have in the past organised sort of, I was going to say classroom training, but sort of taken a bit of time before an audit committee meeting and actually gone through the process of how the register is compiled. And that I think members have found helpful in the past, and it is a little while since we've done that. So through you, Chair, we could set aside a bit of time, perhaps either separately or before one of the future committee meetings.
I will be very happy with that myself. Yes. Sorry, Diane.
These are different times. There are some new lessons to learn, I think, and I certainly would find it very helpful to do something like that.
Thank you. Okay. Moving on. Councillor Angus Ross.
Thank you, Chairman. I think between Diane's point and the point raised by Maria before about the linkage, you know, of two risks coming together, does warrant us having a look and a reflection on it, so we can better comment on it, I suppose. Moving on from that, I was pleased to see the local plan was added. I think it was a point that was raised last time as one of the risks. If I could just move to the enterprise risk management policy, and on page 50, I've got two questions on it, but perhaps we can deal with them separately. On page 53, there's a plan, a diagram, a fancy circle of scope of risk management policy, and it seems the items on that are different from the risks. I'm not sure it matters. I can't quite work it out, but I don't know whether, Andrew, you've got any thoughts on that.
Yes, they're not intended to be the same as what you're seeing on the corporate risk register. So those, I guess, are more generic sort of themes that any organisation, any local authority may identify. So yeah, there isn't supposed to be a direct read across between the two.
Fair enough. The other point was if we could move on a page 54, principle 7 talks about executive portfolio holders, and it made me think, who is really this whole policy aimed at? Because it's not identifying that executive portfolio holders should be really challenging and not just be knowledgeable, but they should be active, and that's reflected further on page 57.59. Am I sort of batting up the wrong tree to say that perhaps it should show that the responsibility of executive portfolio holders to be more challenging?
Yes, again, that's a really good point. I mean, in terms of the register itself, for each of the risks on it, it does identify both the lead director and the lead executive member. But that, I would say, is sort of just step one. And again, as we mature the model even further, I guess it's sort of making sure that scrutiny by the executive member of the risk through the director works well and works effectively.
It does seem that they are dealing with this on a day-to-day basis, whereas we come and reflect on it once in a while. and it should, in my view, perhaps strengthen their responsibility.
Yeah, if I could just add to that as well, through the last couple of years, the Audit Committee has had a director or the chief executive come to your meeting to actually present the risk register. Fortunately, you're stuck with me tonight, but Susan has asked to reinstate that. So from the September meeting, we'll get back into the cycle of either the chief executive or a director coming along to actually present the whole corporate risk register. Because the directors don't just own their own risks, but there's a collective ownership of the corporate risk register by CLT. But I think that would be a legitimate question to pose to directors as they attend Audit Committee in terms of how does that dialogue and challenge between the executive member and director work in practice, and how might it be strengthened?
I hope I can remember then when the chief executive comes back. Thank you.
Thank you very much. Daniel Sargent.
Yes, thank you. I don't have much to add beyond what the other members have already raised. Just one quick thing that I thought looked quite odd was on the matrix where you've got climate emergency as only a 6 rated impact. I'm sure some other members would agree that it should probably be the highest possible impact rating. But one for the officers to reflect on.
Yeah, we'll take that away and we'll consider that as part of the next update.
Thank you very much. Imogen Shepherd-Bay.
Hi there, I guess it's my turn now. Right.
Yes.
Looking at what I've got left from all of that, I've got page 35 governance. During COVID, democracy effectively stopped. Decisions were made that were not scrutinised, and some of them were not that good, not very good decisions. I want to know how that is being addressed and how that's going forward. We're still not back to normal. We've still got people who can't speak at planning committee meetings and things like this. So I just want to know how is this going to be fixed? Would be my first question on that. On page 48, I've got why has telephony been added as a separate item to the list? Surely it belongs with IT. It's part of the IT infrastructure. At least that's what I would normally think. I don't know why it's been put separately, unless you have a completely separate IT and telephony team, which nowadays seems a bit archaic. But it'd be nice to know what's wrong with that telephone system, why it's on here. Is one thing. And I've got, what are the equalities champions? It's page 49. Group. Who are they? What are they? What are they doing? Where's the information about them? I would like to know some more about that personally, because it's not very well clarified what it is. And I've got on the ERM, who is responsible in each area for qualities? I've put that down. That's still left on my list.
Okay, I think there were 4 questions there, so I'll do my best with those. Starting off with your first comment, Imogen, about democracy and what happened during the sort of from April time. So I recognise what you say in terms of possibly that perception. From my point of view, though, I would say that the council was quite quick to move to virtual meetings. It did postpone its March council meeting, but the business from that has now been transacted, and we had
I might add that the Wokingham Town Council moved straight to virtual meetings and didn't stop.
Well, again, I'm sure we could argue this, but I would say I think we moved as quickly as we possibly could do. We had an executive meeting in April, and I take the point about the planning committee, which was made at council a couple of councils ago, and again,
the committees were stopped as well.
And again, without wanting to appear sort of too defensive, I do know there are some authorities, some not too far away from us, who haven't had any democratic meetings, you might say, since March. And I think it is a bit of a mixed picture across the country. We've certainly been in touch with a lot of colleagues in other local authorities to learn in terms of how best to put on the virtual meetings. I think it's probably fair to say that certainly from an officer's perspective, we're still learning. But I would refute the fact that there's been no democratic decision-making processes during the period of COVID. So that was your first point. The second question was, why is telephony separate? The IT infrastructure. The reason is we've got some specific risks around telephony. For example, relating to shoot end in particular, in terms of where equipment is located. So it was felt that having it separate would make sure that it didn't get subsumed and lost in the broader sort of IT infrastructure risk. So that was our rationale for that. The equalities champions, their officers, I'm very happy to provide a more fuller written answer to you, Imogen, in terms of who's in that group. But again, from an officer's perspective, it's seen to be helpful in terms of embedding qualities and qualities thinking more broadly across the organisation. So I'll provide some more detail for that. And your fourth question was about the risk management policy. And did you say, again, was it something about equalities, Imogen? Sorry, I lost that one. So, well,
I think I said it was in the ERM who is responsible each area for quality. So I think that you probably are going to answer that in your response to me anyway. I would imagine. I would hope so.
Yeah. Okay. I'll pick that up in writing for you.
Thank you.
Thank you very much. I think we need to come back to Rachel. I think was waiting to ask another question.
Yeah, thanks. I just had a couple of quick comments, really. So one was on the local plan risk, so that's page 37. I think you've got the rating correct now, which is good. I just think the wording of this section doesn't quite match the severity of the risk. So the document, for example, it still mentions the consultation on the draft local plan in January as an existing control, but we know that that's now out of date. And I just think it needs to be clearer that this process is going to be materially delayed in the wording. And then it's a similar point really for the equalities risk on page 49. So it's good that that's now been included on the register. But I think in the further actions section, we could make reference to satisfactorily addressing the recommendations in the internal audit report, which we're about to come on to, which got a level 3. So i.e. the risks are not being mitigated. So perhaps we could just augment the wording to reflect the levels of risk for those two.
Yeah, thank you.
Okay, Maria, I think you wish to come back as well.
Yeah, it's just very quick, really. Well, first of all, I'd just like to say that it's an extremely comprehensive document or set of documents. And yeah, I'm really impressed that it's been done. So I've just got one little quibble at the end, which is that so there's something about training, but in the financial implications, it says that there's no financial implications. But if we have training, then there would be. So I'm just asking a quick question about that.
I guess it depends how that training was done. If it was through officers, for example, there wouldn't be any additional cost if it was done in that way. And that it has been the way that we've done this in the past. But okay. No, I agree. If we went outside, then clearly there would be a cost.
Okay. Thank you.
Thank you very much. Okay, there's no further questions. Okay, we'll move to the recommendations and the vote for the recommendations. Sorry, Angus, did you?
I'd just like to make a comment about Imogen's point about democracy. And my understanding was, in light of not having the ability to have virtual meetings, that the leaders of each of the 4 groups got together successfully to improve that democracy. How much each of those leaders passed on to the members of their group, of course, we don't know.
Can I come back on that point, please, Chair?
Yeah, come back, yes.
I attended some of those meetings as deputy leader, and you're right that they did take place regularly, but they were briefings, they weren't meetings. And also there was no democratic services support for those, so they weren't minuted. So they did take place, but they weren't like a normal council meeting would be.
I agree with that. I was obviously as well. I've come back as he's just thrown that at me. I'm afraid it's not the same. Although we had 2 of our councillors went along to those meetings, as As Rachel said, they were not the same as a full democratic scrutiny. There was no COVID scrutiny committee, which I know some councils have put together. And certainly it was a very filtered thing. We were not having our regular session of meetings on things. What came through to us was extremely light by comparison. And it's not the same. We are all elected to represent our residents, and we should be doing that. And we were not able to do that during COVID.
And they were also confidential, so that, they couldn't be scrutinised by the public either.
Thank you very much. Okay. Yes, so we need to...
You're on mute, Councillor Soane.
We can't hear you. Yes.
Right. Well, there we go. Okay, yeah, moving on to the recommendations. We have 3 recommendations to consider, and we need to vote on these. Again, they're in the agenda pack. If you'd like me to read through them, I will. Otherwise, if anybody is unhappy with voting for these en bloc, can you please indicate? I see no objections to voting for them en bloc. So can I ask then, first of all, is anybody against the recommendations? No. Is anybody abstaining from the recommendations? No, so I can therefore assume that the recommendations have been voted on and carried. Thank you very much. Okay, we move on now to item 9, which is the Internal Audit and Investigations Annual Report. And I think we come back to Andrew again.
Okay, thank you, Chairman. Just very briefly then, so you received this annual report that you're meeting around this time each year. The overall conclusion that the internal audit team have reached is that internal controls are substantially complete and generally effective. The one area I'd probably just want to bring to your attention, and Councillor Burgess has already mentioned it, but the one area that we gave the level 3 assurance to, and you can see in the pack, I think it's on page, bear with me, bits of paper, page 94. It sets out the different levels of internal audit assurance. So the area that got a level 3 during last year was equalities. And I think as it says in the commentary in the annual report, whilst there were some positive movements in terms of the way that the council's addressing equalities, so for example, equality impact statements appear much more regularly, I would say now, as part of the executive decision making. I think that's been a positive step forward. There is still some way to go. We mentioned under the last item officer champions, which we've now put in place, and that was one of the areas that the audit was recommending. But probably the most fundamental recommendation is that the council reviews the equality objectives that were last considered back in 2017. And again, you'll see later on in the annual governance statement item that is one of the actions that officers wish to take forward to make sure that review is undertaken, using the scrutiny committee and having a wide consultation as part of that review of objectives. So I think that's probably the key point for the committee to be aware of. Just a couple of sort of less significant things, perhaps. I'm keen to hear from members how useful or not, as the case may be, you find this annual report and how we might improve it. We certainly recognise as officers that we need to do more work around performance information. And that's very much sort of in place for this year now, and you'll see much more performance information detail coming back to the committee, but keen to hear anything else that you would find useful. And finally, I'd just like to say that since March, I mean, the audit team has been focused very much on COVID work, whether that's been redeployed in some instances to support particularly adult social care, but also working with Bob's team in terms of business grants and providing support to his team there. So, and on top of all that, obviously, in terms of the council's overall sort of risk profile, it's just changed so significantly since March that I would like to bring to your next meeting proposals around an in-year change to the audit plan, recognising those things that I've just outlined. And it may also be an opportunity for you as a committee to think about some of the things that you might want to see the audit team look at as a priority during the rest of this financial year. I know something was mentioned, for example, under the Treasury Management item. But I'll leave it there, Chairman, and happy to take any questions.
Thank you very much. I think I now come to Rachel. Am I the right way round? Oh, no, perhaps not. I think I'll go back to Imogen.
Oh.
You can talk to me again. Yes, hello. I'm looking at this report and I'm very pleased to see that there's more prominence for the public sector equality duty. I think it's been an important thing that we need to look at. And I see that it's obviously having some issues, but it doesn't really explain what sort of issues they've been having. It's just saying it's got a 3, but it doesn't say what sort of things were found. Is that a reasonable thing to ask for? I don't know.
Well, I tried to in my introduction, maybe not very successfully, but I tried to give you a bit more of a flavour of what the recommendations were out of that. But perhaps if I could sort of make that commitment that where there is any audit area that gets a less than satisfactory conclusion from the audit team, that I bring back, if not the audit report itself, certainly the key findings and key recommendations. So you've got that. And I should have mentioned, Chairman, if you just permit me to divert a little bit, under the previous item, risk management, the audit team is just completing their internal audit of risk management. And I'd like to bring the findings of that back to the committee in September. So again, you've got that second source of assurance about how council is organising risk management.
And what you guys are doing to try and fix it. Yeah, that would be cool. Thank you.
Thank you. Okay, we come to Daniel Sargent, please.
No questions from me. Thank you.
Thank you very much. To Angus Ross.
Thank you, Chairman. I was just looking through it again, and just one thing, because of items in the press in other places that has come up recently, on page 89, talking about counter fraud, and paragraph 5.4, it mentions about 3 whistleblowing investigations, and whistleblowing seems to blow hot and cold, if that's not mixing my metaphors too much. And I wonder, is there a whistleblowing policy, and where do these whistleblowing investigations end up?
Okay, thank you. Well, yeah, there is a whistleblowing policy, and in fact, it's in the next item, the fraud policies. It is one of those fraud policies. So it's a requirement for the council to have a whistleblowing policy. There's various ways that we publicise it. It's on the council's website. We get quite a lot of inquiries through that route. What I would say is that the vast majority of them tend to be service complaints as opposed to what the whistleblowing policy actually sets out, which is more around allegations of fraud or irregularity or dishonesty. So it might be something when we think about the next item about how do we better publicise the different fraud policies, including whistleblowing that we've got.
Thank you very much.
Thank you. Okay, we come to Diane King. Do you have any questions?
No, thank you, Chairman.
Thank you. On to Maria G, please. Do you have a question?
Yes, I do. I have two questions. The first one is, how many people are in the internal audit team?
I'd have to give you a precise written answer to that. It's approximately 10 people. But what I should say, Maria, is that it's a shared service with the Royal Borough of Windsor and Maidenhead. So we're providing all the internal audit functions to both councils. And in addition to that, we provide some audit services to Bracknell Forest and also to Rushmore. So through the shared service arrangement that we've got, we're actually generating income for Wokingham Borough Council through the service.
Okay, and in your opinion, is the audit team able to cope with the scope of its work such that it doesn't pose another risk, if you like, the risk of not doing internal audit and then finding things out? So a meta risk, I suppose.
Yeah, I would say that I'm confident at this point in time that we can discharge the duty appropriately. As I say, we did have some redeployment earlier on in the year because of COVID, and the focus in the first quarter of this year has been somewhat different to what we anticipated as per the plan that you looked at in February. But at this point in time, I would say that I'm comfortable that we can discharge our duties. But again, as a committee, I think that's a really good challenge.
Okay, thank you very much. For my final question, those two were linked, is I see that public health, which was done before my time and was carried forward, is a 3. And I'm just wondering when that will be on the programme, because obviously that's really critical. And there obviously has been some talk in the press about local authority public health departments not being utilised to their best effect. And I see we've got a problem on resources, or the audit was about resources and assets. So I'm just wondering when that's going to come back. I would like to see it as something that's important and coming forward. I've checked the forward programme and it's not on it. Although in your report you said that you were doing some finishing off work in 2019-20.
Yeah, so as it says in the report, we did have some work planned back in March, which was obviously curtailed because of COVID and obviously the focus of the team. So we still need to do that work. I would hope that not the next meeting, but possibly the November meeting, I can give you an update on public health at that meeting.
Yeah, it would be good, obviously, if it were not a 3, because that's quite low down, isn't it? So, especially in the current climate.
Yeah, I think that when the field work was done in that area, there were some particular issues that have since been addressed anyway. So there were some gaps in terms of key personnel that have since been plugged anyway. So it was a snapshot at a point in time, but yeah, you're right. We need to do that follow-up work, and we'll report that back to the Audit Committee to give you the assurance that it's no longer a 3.
Thank you very much.
Mute myself. Rachel, coming to you now.
Thanks. So I was also going to raise the issue of the detail in the report about the qualities audit. Personally, I do find the report useful, Andrew, to answer your question, but I welcome your commitment to giving more detail on the audits that get a rating of 3 or below. And could I also request that particular audit report is circulated to the committee?
Yeah, I'll pick that up.
And then one other quick question about the process. So in section 3.4, it says that internal audit check high or very high risk recommendations, check that they have been actioned. So I was just wondering to what extent they are actually audited and what sort of evidence on those checks is carried out. Is it just a case that the auditors say to the relevant manager, has this been done, and they give a sort of verbal update, or do they actually ask for evidence that those actions have been completed?
It's a combination of the two, but certainly, if it was, for example, a policy that didn't exist, then we'd actually look to see the evidence of the policy, wouldn't just take it at face value. But so largely speaking, the answer is yes, we'd seek evidence for those high risk recommendations.
Okay, thank you.
Thank you very much. If there's no further questions, we will go to a vote to receive the recommendations and note the report. Again, all those, if anybody is against accepting that recommendation, can they please show or please indicate, please? Any abstentions? Therefore, I will assume that everybody is in agreement, and therefore the recommendation is accepted. Thank you very much. Thank you, Andrew. I don't know whether you're free now. Oh no, I think you've got the next one as well.
I'm afraid so, Chairman. So, yes, it's review of the council's...
Yes, anti-fraud.
Yeah, so this is pages 95 to 146. So again, it's good practice that periodically the committee considers the fraud policies that the council's got. There are 6 policies: anti-fraud, anti-corruption policy, the whistleblowing policy that was mentioned in the last item, anti-money laundering policy, prosecutions and sanctions, anti-bribery, and the Regulation of Investigatory Powers Act. So these form a raft of policies. They're part of the council's constitution. The changes that you've got in your pack tonight, and they are marked in the documents themselves, but I would say the changes are almost entirely housekeeping items. There's nothing of particular significance that I'd like to bring to the committee's attention. The only question I would pose myself is ideas about how we might better publicise these policies and use these policies, particularly as a deterrent for fraud. But also, as it was mentioned previously, whistleblowing. How do we best make sure that the community at large are aware of the policies and the council's stance on all of these things?
Thank you very much. Can I go first of all to Rachel Burgess, please?
Thank you. Thanks for these. I was interested to know whether there's a sort of level of detail under this that we haven't seen. So, for example, is there a fraud risk register and an anti-money laundering risk register? So things like anti-money laundering, I think it would be useful to see the kind of areas where the council is most at risk. So I think money laundering is quite alien to most people, not quite sure what it is or how it happens. So if there are particular areas, say, where we do receive a lot of cash and then there's perhaps a likelihood where a refund might be given or whatever it is, I think real life analysis and real life examples are useful to kind of bring policies like this to life. Similarly with fraud, there's sort of no mention in there about some of the latest trends in fraud, so things like cybercrime or some of the phishing emails that are really kind of sure you get them all the time in council, where asking for an urgent payment to be made or pretending to be the CEO and that kind of stuff. So I think some real life examples would be good, and I would be interested to know if there are risk registers for those areas.
Okay, the short answer is no, there aren't risk registers. I think it's a really good point though, and again, in terms of maturing our sort of approach to risk, it's something that I think absolutely we should be looking to do over these next few months. I would say also that CITFA produce a lot of guidance in terms of fraud, and there is a self-assessment that they have, which again I think it might be useful for the committee to consider where we are at the moment in terms of our fraud risks using that self-assessment tool, and that's something that I could bring back to the committee again, maybe not next time, but maybe in the November meeting.
Yeah, that sounds really good. I think coming back to your point about training and comms, I mean that's absolutely key for this kind of thing, I think, because fraud, we know fraud is happening all the time, whether it's reported or found out or not. I think it's really important to make sure that it's in the forefront of all our minds, staff, members, everyone. And some of these things can have very serious consequences. So I don't know what training has happened and what training is planned, but I know there's some fairly good sort of online options that are quite easy to roll out to members, to staff. But I think if we're not doing it already, we need to be doing that. And then I just had one further point on the policies themselves, which was to do with the Criminal Finances Act. So that came in 2017, and it's basically about tax evasion. So if organisations are found to be facilitating tax evasion, by a third party, i.e. by not doing the right checks as an organisation, not having the right controls, then they can face quite serious penalties. I know some local authorities do have specific policies on Criminal Finances Act. Is that something that we have anything on tax evasion or are looking at bringing in?
It isn't, but again, if I could take that point away and consider whether we need to add something in with regard to that, and I'm happy to go back to the committee on that particular point.
Okay, thank you.
Thank you, Rachel. Maria?
No, I don't have any other than to back up what Rachel said about training. I think probably this committee should have training. This is a lot to take in, and as Rachel mentioned, some practical examples. It would be good to have some training that focused on practical examples related to each policy, and then if that training appears to work well, then I think it's an area where all councillors need to have training. I think we may have done something right at the start, but induction can seem a long time ago. So training would be good. Thank you.
You're muted, Chair.
Yeah, sorry. Diane, do you have any questions?
No, thank you, Chairman.
Thank you very much. We come on to Angus. Angus, do you have any points you wish to raise?
Just an observation. Andrew asked about how we might publicise this, and I'm just looking on my other screen at the front page of our website, and there's none of the boxes there lead you to think that there is these policies available. I'm sure they are all there underlying, but there's nothing that immediately attracts you to that.
Yeah, no, again, it's a really good point, and we'll have a look with Dave Allen's team in terms of how we might promote them. As you say, Angus, they are there, and indeed they're part of the Constitution, which is on the website, but it is tucked away. So we'll take that point forward.
Thank you. Daniel Sargent.
No, nothing from me. Thank you.
Thank you very much. And finally, Imogen.
I think probably nothing. I'm sort of wondering how staff are protected in this, but apart from that, it looks pretty standard stuff to me.
Okay. Thank you very much. So if there's no further comments or questions, we'll go to the recommendation. And the recommendation is as on the agenda. Again, it's to propose amendments of the anti-fraud and corruption policy, the whistleblowing policy, anti-money laundering policy, prosecutions and sanctions policy. And this should be recommended and approved to Council via the Constitution Review Working Group. Are we all happy with that recommendation? If anybody is against it, can they please indicate? Anybody wishing to abstain? No, therefore I can say that the recommendation is carried. Thank you very much. Okay, we move on to item 11 now, which is the Local Code of Corporate Governance, and we ask Stephen Murtagh to present, please. Is he there?
Indeed, yeah.
Thank you very much.
Thank you, Chair. Good evening, all. As we know, one of the key roles of the Audit Committee is to instil good governance in the council, and we already have a local code of corporate governance in place, but this is from 2016. So, like the fraud policies, it's good practice to review these on a regular basis, and this also coincided with the advice that we got from external audit, and also the publication and approval of the community vision and the delivery plan, and the refreshed local code. Now, we've linked it to the delivery plan and the vision. So if we look at areas such as environmental aspects, servicing our residents, managing projects, there's a direct link between the vision the delivery plan and our local code now. The original code linked to the principles of the Cipher Solis, good governance in public sector, and this refresh of the code also applies the same principles. Although what we have done now is evidenced where, or we've set out the sort of evidence we would expect to see in place to meet those principles. And as part of the exercise, we benchmarked against numerous other local authorities around the country, from Lancashire down to Norfolk and Essex, to see if we could put together a code that better reflected the governance in the council. The one thing we do have to do, and it also links with what was mentioned earlier on about the fraud policies, is about advertising them and raising awareness amongst members and officers as well. So at some stage we would need to publish them and raise the awareness. And the intention is, if we get the approval this evening from yourselves, then the actual refresh code will go to council for formal approval in September. So that's the summary, and happy to take any questions. And you'll see the actual local code, the paper starts from page 147 on the agenda with you.
Thank you very much. Okay, questions. Rachel, I'll come to you first.
I don't have any questions on this particular one. I do on the governance statement, item 12.
Okay.
Not on this one. Thank you.
Not on this one. Okay, Maria?
I don't have any questions on this one. Thank you.
Okay, Diane?
No, thank you, Chairman.
No. Angus?
No questions, thank you, Chairman.
No. Daniel?
No, that's very clear, thank you.
And Imogen?
No, I'm fine with this, please, thanks.
Okay, well, thank you very much. For that, then, we go to the recommendation. The Audit Committee is asked to review and comment on the revised local Code of Conduct, Code of Corporate Governance, Appendix A, and to recommend to Council the revised local Code of Corporate Governance. Anybody who is not in agreement with that, could they please indicate? Anybody who wishes to abstain, please indicate. Therefore, I can assume that that one is recommended and can go forward to the council. Thank you very much. Thank you, Stephen, for that.
Thank you.
Ooh, a minute, let's not mute myself again. Come on to item 12, annual government statement. We come back to you, Andrew.
Okay, thank you, Chair. The annual governance statement tonight, it's deliberately presented to you in a draft form, because I think it's important that the Audit Committee has a genuine opportunity to feed into this process, and perhaps we haven't always done that in the past, where it's been presented relatively late in the day. This does form part of the financial statements that you'll be considering later this year, so there's still an opportunity to shape it. But I wanted to bring it to you this evening because I think the important thing is the actions coming out of this. And certainly from an officer's perspective, we're very keen to address the actions that have been identified as areas for improvement. So the couple of points I just want to bring to your attention. On page 73 at the bottom, it starts off with moving on to page 174, the 5 areas that were identified in last year's annual governance statement in terms of areas requiring attention. And you can see the updates against each of those 5 areas. Equally, in the following table at the bottom of page 174, and you will find in more detail at page 179, is the improvement plan for this future year. And happy to take questions on any of the points that come out members would like to ask. What I would say, though, is it is, as I've said about earlier items, trying to see a read across between the corporate risk register, for example, any of the policies that you've looked at this evening, the annual audit report, any issues that you've heard about that you believe should be featured in the annual governance statements as areas requiring further attention. This has been through an officer process to date, where each director has produced a management assurance statement for the chief executive. But as I say, I think it's important that members of the Audit Committee now have the opportunity to further shape the annual governance statement before it goes with the financial statement. Happy to take questions, Chair.
Thank you very much. So I think this time we start with Rachel.
Thank you. I just had a couple of questions on a couple of the actions. On the market supplements action, could you just explain a bit more about what the issue is there? Because obviously we looked at the council's pay policy at full council last week, and that states that we allow market supplements. So I'm not sure what. Could you just say a bit more about what the issue is there that needs fixing? Because I haven't seen that in other areas being discussed.
Yeah, the issue is really about the application. So not the fact that we don't have a policy, but it's about the application of the policy and whether or not that has been applied fairly and consistently across the council. So there's work to do in that area to make sure that we don't have any particular weaknesses that we need to identify. But the actions are broader, I guess, in terms of making sure that we've got a robust pay and reward system moving forward in the future, and the new people strategy will address that particular point.
Okay, and then just a minor point really about the equalities action. I think again it would just be worth noting that was internally audited and it came out at the level 3. Just to show that the severity of it, I suppose.
Yeah, no, I'll make that point.
Thanks.
Thank you. Maria G.
Yes, so I have two observations. So the first, I don't know why that is. So the first,
somebody hasn't muted, so and it's echoing back.
Oh yeah. So the first is that I've been looking at the procedures for this committee and for other committees, and it seems to me that the revenue and capital monitoring reports go only to executive. As far as I can see, they don't go to the Overview and Scrutiny Management Committee. They don't come to this committee, but they go straight to executive, who, without any scrutiny on the way up. And I think that's a big omission. And I would like to see something about governance and scrutiny in that area being strengthened.
If I could just comment on that. So what I would say is, and Bob might like to add to this, but the Overview and Scrutiny Committee last year, and indeed for this next year, is intending to scrutinise the council's budget in a significant amount of detail. So there is Scrutiny Committee involvement in that particular process. I would also say that as an audit committee, you get assurance from the internal audit team in terms of the council's major financial systems. You also get assurance from external audit with regard to the financial statements themselves. So I'm not quite sure what I could add to that, Maria.
Well, we sort of look at treasury management, don't we? And other sort of management and outturn reports. And I'm at a loss to understand why we don't do capital and revenue monitoring.
It is an issue that we could put to the Constitution Review Working Group if members felt that was something that you would want to consider.
Yeah, I think I would. And then I just have one other observation, and that is about public sector quality duty and decision making. So this seems to be that if you make a decision to do something, then public sector quality duty comes into play. But when you make a decision not to do something, so I'll give the example which probably people have heard over and over again, boards in the town centre, so advertising boards in the town centre. I've asked before and I've been told that either a policy exists or there's no requirement for a new one. Now, it seems to me that the presence of advertising boards on the pavement have significant adverse effects on people who are very vulnerable, people with disabilities, with with mobility and sight impairment, people who are aged and very frail, parents or other carers with buggies. But it seems to me that one person has decided that nothing needs to be done, and therefore you don't go through the public sector equality duty routine, if you like. So one person in terms of the executive member is what I'm thinking, rather than the team behind them. So I'm just wondering whether we can strengthen what we do in terms of public sector equality duty, so that if it appears as though somebody has made a decision not to do something specifically, and it would have a big effect on anybody with a protected characteristic, that we bring that within the remit of the review of the consideration of public sector equality duty.
Okay, I'm not sure, Chair, whether that's something for the actual action plan, but I can certainly pass that request on to the Equality Champions group to look at whether there's things that we could do to strengthen. I mean, I'm not aware of all the detail of the A boards. I've read about it, but as an example.
Yeah, I'm just using it as an example of where a decision has been taken not to do anything. And I want to make sure that, so I'm not asking you to respond on the A boards. I'm asking where somebody makes a decision not to do something, it appears that we don't get any public sector equality duty scrutiny, even though the policy or the guidance may have been issued before the PSED came into play. So it's that. So I'm not asking for a decision on A boards. What I'm asking for is a clarification of the remit of our responsibilities under public sector equality duty when somebody makes a decision not to do something as opposed to a decision to do something.
Okay, let me take that away as an action, Maria. But I think, maybe the Equality Champions group, maybe scrutiny as well, because scrutiny will be involved in the review of the equality objectives anyway. And I think it's a good scrutiny question too.
Yeah, I think the last time anybody else involved the decision or the conversation about advertising boards, I think Angus Ross has been on that email trail, so I think he'll tell you that there's enough people on the email trail. But thank you.
Thank you very much. Thank you. Diane, do you have a question or comment?
No, thank you, Chairman.
No, thank you. Angus, come to you.
Thank you, Chairman. It's just a small point, perhaps, on the improvement plan on home to school transport appeals on page 180. And in the actions, it says WBC will be compliant in relation to appeals arrangements. Strikes me very strange words, which I fail to understand what it's trying to say.
I think what it's trying to get across is that it was identified by the Ombudsman earlier this year that our appeals process for home to school transport wasn't compliant with the legislation. So in that final column in the action plan, it talks about the actual outcome or the improvement outcome that's being sought. So it's just possibly a long-winded way, but a way of sort of trying to articulate that if we implement those actions, we'll have a compliant appeals process.
Yes, I suppose so. I suppose it's the word arrangements that doesn't impress me, but okay.
I'm happy to change that word arrangement, so I'll just say what I've just said, I guess, that we'll have a compliant appeals process.
Yeah, thank you.
Daniel Sargent.
Nothing from me, thank you.
Nothing from you. muting myself again. I keep muting myself. Imogen, do you have any comments?
Oh yeah, sort of backing up what Maria said in terms of the public sector, there needs to be a way of escalating things, a framework of dealing with problems relating to the public sector equality duty, because we're obviously legally obliged to do this. I mean, like with the Denmark Street closure in Wokingham, where they blocked the disabled parking, it basically was me and Richard Delinsky had to bounce it up through Susan Parsonage and back down again, from what I can tell, to make anyone take any notice of it. I mean, the highways decided that they wanted to close the disabled parking bays and the road and access to that area. So I feel that there needs to be a way of escalating problems like that in a much more efficient way than what we had to do. That's certainly on that. Do you understand what I'm saying, Andrew?
I do, yes.
Okay, there needs to be a better way of dealing with this than what we had to do. I'm looking at item 9, the government's framework. Sorry, Andrew, it's you again. It's sort of saying implementing good practice of transparency, reporting, audit to deliver effective accountability. I don't think that what we have to do with the property investments and what's happening with those is that it goes through no scrutiny process whatsoever. I would have thought that a lot of these things would apply to that. And why is that process not being scrutinised in any way? If someone goes out and makes an investment, how well is that investment returning, behaving, whatever it is? We're not able to look at that anywhere. It doesn't go anywhere. And Maria pointed out the bits with the capital programme, and we've recently also gone to executive is the items regarding things that are being deferred due to COVID. There is no details going along with it to say why some things have been deferred a year or not, or is that the best way to do? We've also got a report coming to the executive about Hessian Sachs, an investment in the Dinton Pastures Activity Centre at 600k. Where's the business cases for these? What's the plan? You know, why are we switching to Hessian Sachs and not looking at the other options? I assume somebody's done some work, but nobody's seeing it. We can't honestly say, you know, actually that is actually quite a good choice or not. Nobody's scrutinising that or analysing it in any way before it goes to executive. So I'm looking at your governance framework and wondering why a lot of these things don't apply to things like that. It kind of also, I'm still not very, the issues regarding what happened during COVID, where there was no scrutiny at all, and what happened during that period at all. There wasn't like a COVID scrutiny committee, which some people have set up, and it seems to have got missed. I'm afraid I'm not very happy with what we have here at all. You know, I don't know how it could, but you know, why? There's lots of things I'm saying. Why have they not come to audit or one of the management committees before going ahead? And I question whether the governance framework is actually being effective. Sorry, Andrew. And that strikes me as the one sort of thing that stands out in all of this. Is that it's missing the mark in a few things, and how things are being done. They're just falling through falling through loops, from what I can see.
If I could just respond, I mean, you mentioned the property investments again. I mean, one way, rather than through this annual governance statement, one way you might seek assurance is by requesting that internal audit add that to their work programme.
Yes, please.
So have an independent look at it. As I say, I'll be bringing a report back to the September committee anyway with proposed changes. But if you thought that was a priority.
But what about these things that are going to the executive? Where's the business case for a lot of things? I just don't feel that it's being effectively managed. Sorry.
I'm not sure I can add anything to that comment, Imogen, in terms of, my understanding is that business cases should go with executive papers as part of the decision-making process. I take the point about the item tomorrow, and I know there's questions from members about that particular issue tomorrow.
But you understand why that it's got that far and people are looking, should we spend some money on it? But there's nothing in the papers about business case. It was not obvious. It was not discussed with any of the councillors or anything before it got there. And suddenly it's appeared at the last minute as a financial decision. And we're wondering where the rest of the information is, basically.
Can I take an action, Chairman, to discuss this with the directors and Susan as to whether this should feature in the annual governance statement?
Yeah, that's fine. I would think that'd be a good idea.
Fine by me.
Thank you very much. Maria, you have your hand up, wishing to speak.
Yes, Chair, this is actually a question for you. I'm really confused now about the recommendation because Andrew said that this is going to come back to us in September, but recommendation A is about the draft report, and then recommendation B is about sending the annual government statement to the leader of the council. So if this is draft, then I don't believe we should be voting on B, and I don't really understand how C would fit in. If we voted for A and not for B, how would we vote for C? So I'm wondering if you can clarify what the recommendations will be, or whether Andrew can chip in there, because you said it was draft, so I'm a little bit confused now.
Chair, if you'd like me to... Oh. So you're mute, Chair.
Carry on, yeah, okay.
I was just going to suggest that you might want to amend recommendation B, where it says recommends it to the leader and chief executive subject to the comments made this evening of the committee. You're on mute again, Chair.
Sorry, keep turning myself off. So item B, we make it subject to the recommendations made by this committee tonight.
I don't think we can do that either, because it's coming back to the committee in September, so that doesn't make logical sense. We can't vote now to accept the recommendations, because then what's the point in bringing it back to the committee in September? I think we should just vote on A and vote to defer B and C, or defer B if we think that C is votable on. I don't really understand what C is about, to be honest, but we could definitely vote on A. I don't think we can vote on C at all, given that this is coming back to be looked at again. Can you explain C, Andrew?
Yeah, so C is about the action plan or the improvement plan at Appendix B on page 179. It's about the Audit Committee monitoring the progress of those actions in terms of have they been implemented. The Audit Committee has done this in the past, so maybe at your November meeting you'd have a report showing the progress against those actions. So I think that part, Chairman, is still relevant, because I think what I've heard from the committee tonight is not that those actions that are in there are the wrong ones, but possibly you might want to add something further into the improvement plan.
Right.
Yeah, that's what I was thinking, Andrew, that we should. I'm not on mute. That's what I was thinking, that we should add some changes in based on the discussions this evening. So as long as C doesn't refer to the action plan that's attached, but it refers to an action plan that is updated, so that might be better waiting until the next meeting as well, would be my proposal.
Achieving the government's action plan on those areas. So you're quite happy to vote on A and B?
No. No, we can't accept it if it's on your draft plan. So if we consider the draft plan and then we're going to vote on it in September, then we can't do B. And if the action plan changes as a result of comments in this meeting, then we're voting on the wrong action plan, and that should be deferred as well. Is my view. I don't know what other.
I don't think we can support this as it stands.
Yeah. Right. So I'm happy to vote for A because we have considered it and made some recommendations.
Okay.
But I'm happy to vote on B and C.
What's the general feeling? Andrew, sorry, did you want to come back?
Yeah, yes, Chairman. Yes, we we do have some time before this needs to be finalised. As I said in my introduction, I was just keen to bring it tonight so you had an early sight of it and you could help shape it. So I can bring this back. It will come back to the committee as part of the financial statements.
Right.
At whatever meeting that is later this year. So you will have a chance to sign off the final version anyway.
Okay. Right. So based on that then, is the committee quite happy to vote on A, but leaving B and C till another meeting? Although, anybody against that proposal?
I think I'm going to be...
Sorry, Imogen?
I think I'm going to be against it, sorry.
Against what? Voting on item A?
Yeah, the whole thing, thank you.
You're going to be against it. Angus, you've got your hand up. Did you?
Yes, Chairman. I mean, A is only that we've considered it,
yes.
And I can't see any reason to vote against that. B, I think if it is okay for the council's time chair, should come back to us in September. And C, to me, just requires some date put with it as to where, or dates or periodicity of when this will come back to look at the action plan or the implementation plan.
Okay. Anybody else have a comment to make?
I agree with the proposal that Angus has made. I think that tidies it up and we can clarify it at the next meeting, but we don't hold anything up.
Okay. So where we vote for A.
Yeah.
I think I might support A. If that's all it is, I'll support A.
Yes, you're just considering it. Okay, so those in favour, anybody against A as a recommendation? No. Anybody abstaining? No. Therefore, I will assume that the recommendation A is accepted and passed. B and C, Andrew, are we actually withdrawing that at the moment? Is that the way to go, or would you rather see us vote on it?
I'd be happy to withdraw B for now and bring that back to a future meeting. C was really just the actions that you've got in front of you tonight, plus if there are additional ones, bringing a progress report back to the committee. I was thinking of your November meeting to bring that back.
Okay, that's
so that was all that was, just agreeing to the process of receiving update reports.
Could we amend C then to say that update reports, that the governance improvement action plan, as contained in this report, any additional actions would come back to the committee, plus any additional actions added as a result of this plan going from draft to final, come back to the committee, because that would make sense.
Would everybody be happy with that amendment to that recommendation?
I thought, Chairman, that the idea of this was that it gave us the opportunity to review the progress. And surely that is the basis of that recommendation.
I think, Angus, the only thing I'm disagreeing with you on that is that we shouldn't recognise that the action plan is the action plan, but that it may be amended. So if we said in achieving the governance improvement action as amended throughout the year.
Chairman, I'm very happy to bring back the action plan with a progress update with the actions that you've got in tonight, plus any further ones that you agree or you sign off as a committee at a later date. So it will make sure it picks up both the ones that you've seen this evening and any future ones that are added.
Right. Okay. So based on that,
I can support that, Chairman. I would second that if you want that as a recommendation.
Okay, that's fine. So that's for item C. B, we're not going to vote on. C, we will vote on it with that recommendation.
what recommendation? That it will be amended.
Andrew,
appropriate.
Sorry, Andrew, would you like to go back again and explain what your alteration would be to item C, as you just said, so that we can actually vote on it?
So I would, after the words achieving the governance improvement action plan, on those areas identified at the meeting of the 29th of July, plus any additional actions subsequently identified before the formal sign-off of the annual governance statement. I'm sure Madeline will capture those words for the minutes.
Okay.
If the committee is happy to consider that revised recommendation.
Okay, so I'll ask the committee again, based on the amendments that Andrew has suggested that will be added to by Madeline, are you happy to vote for C? Those who are against, please indicate. Maria, I take it, is that an against?
Oh, no.
No.
Against
sorry, okay. Is anybody...
Hang on, wait a minute. Yeah, my hand up. Sorry about that. No, I'm voting for it. Thank you.
Okay. Is anybody voting against?
I will vote for it. With that C, yes. I'm not going to accept this report, but okay.
Right. So I can assume now then that for item A and item C, the votes are unanimous. Item B is has been withdrawn. Okay, that's fine. Thank you very much. Okay. We come on to item 13, forward programme. I'll ask Madeline if there are any changes to be made.
Do officers have any changes that they would like to put forward?
Yeah. Andrew, you have your hand up, yes?
Yes, Chairman. There was a couple of ones that I would like to suggest. One was what I mentioned earlier, which was the committee in September receiving the findings and recommendations of the risk management audit.
Yeah.
And the second item was around the audit committee itself and its effectiveness. So it's good.
Yes,
you want to add that, Chairman? Sorry, Chair, you've gone to mute.
It was for us to perhaps have the opportunity to check our own programme and look at our effectiveness as a committee. So this came from a SIPFA report and a recommendation, and we were going to consider using the report that SIPFA produced to produce a survey for amongst ourselves that we could answer some questions online and bring the results back to our September meeting. Basically, it's more or less scrutinising ourselves as a committee. And it's something that I don't think we've done for a while. And it's the beginning of a new year. It would be a good opportunity to do this. So this would be just a very detailed survey, short detailed survey to look at our own effectiveness as a committee. And this then would be reported back in the September meeting.
I would second that, Chairman. I think it's a very good idea because a lot of us are relatively new to the committee, and also it's always good to refresh your knowledge. So I actually very much support that. Okay,
Maria, I see you have your hand raised.
Yes. So I asked earlier about public health, and I've forgotten what we decided. Andrew, were we going to bring back the public health audit as something we were looking at in final form?
Yes, we are. I suspect it will be the November meeting until that's ready, though.
Okay, that's fine. So can we add that to the November meeting then?
Yep. Right. Angus. Angus, you have your hand up.
Yeah, thank you, Chairman. Yes, for the November meeting, should we not be getting an update on the 2019-2020 audit from Ernst & Young?
that was already agreed, wasn't it, earlier? I thought when we had the report from them.
Yes, I think. Sorry, Chairman, it's Helen from EY. I think the forward planner just needs to be updated for the fact that we have now, between ourselves and Finance, agreed that the statement of accounts, the annual governance statement in the Ernst & Young letter would all go to the November meeting. For some reason, I think our audit results report has fallen off the September agenda. So I think items 2 and 3, plus our audit results report, which would have been item 4 for September, all move into November, which started to make November look a bit busy, I think. But.
Okay. Yes. Thank you. Okay, so that's the alterations. The only thing I will add to that is that the November meeting, which was for the 4th of November, has got to be put back until the 23rd because of pressures of agendas for other meetings. So the November meeting will now be on the 23rd and not the 4th. Okay, everybody noted. Okay. Can I just ask, I mean, I did mention about this survey. Is everybody happy with that? Diane said that she is. Would it be something that we would all be interested in taking part?
I would support that.
Yeah, okay. Jolly good. Right. We will go ahead. If there's no other items for forward programming, I'd like to thank everybody for their parts in the meeting. And thank you very much for attending. Andrew, you have your hand.
Sorry, Chairman. Yes, it was just one further item for the September meeting that I mentioned earlier. This was the in-year review of the audit plan. So for the 23rd of September.
23rd of September. Okay, that's fine. Thank you. Okay, if there's no other further business, I will again thank you all very much for joining us in the meeting. Angus, are you wishing to speak? I can see your... No? Okay.
No, when you finish, I was just going to say thank you, Chairman.
Okay, right, thank you. And I wish you all a good night. And thank you very much.
Good night,
everybody.
Thank you too. Well done, Chairman.
Thank you.
Good night.
Bye.
Good night.
Good night.